Today, my guest is Joe Snyder. Joe is the president of Lannistor Holdings, a blockchain company. They leverage technology to provide investors fast funding for your project. Before we get into our conversation with Joe, quick reminder, if you like the show, please let us know. You can do this. There's a couple of ways. You can give us a like, you can leave a comment, or if you like the show, share the show. And if you haven't already, please consider subscribing. The more subscribers we have, the better our chances of finding top quality guests. So please do. And also, I want to let you know that we have a YouTube channel too. If you'd like to see the guest, you can find our channel on YouTube. Look up Commercial Real Estate Pro Network on the search bar in the YouTube channel there, or in YouTube, and you'll find us. So with that, we are now ready to speak with my guest, Joe Snyder. Joe, how you doing?
We're gonna get there. I'm doing awesome. How are you doing today?
I'm fumbling here, but I appreciate you hanging in there with me.
No worries. We do these early in the morning. Make sure neither of us are ready.
There you go. So, Joe, welcome to CREPN Radio. And to get started, if you could share with myself and the listeners a little bit about your background.
Sure. Yeah. Thanks for having me on. I've gotten to hear a few of your episodes, and it's very interesting, especially as somebody who has been a real estate investor for over 15 years. And our family, as a unit, we do a lot of things fairly closely knitly, and our family owns a real estate brokerage actually in the Phoenix area. We do some property management as well as own our own investment properties. So it's definitely a sector that we know very, very well. My name is Joe Snyder. I'm the CEO of Lannistor Holdings, and Lannistor Holdings is a blockchain development company based in Phoenix, Arizona. Our claim to fame is doing blockchain and smart contract and security software development for clients in multiple sectors. But our internal focus is on designing and building the products for real estate finance that blockchain, some of the verticals where we see that blockchain has some disruption factors. So we're working on a couple of things specifically for real estate investors as a target client for the capital space, and for real estate investors as target investors for some of the tranches of products that we're looking to put together on smart contracts, on blockchain technology to streamline costs, mitigate risk, and build out some of these products in a way that allows us to own intellectual property in the space, which is a pretty blue ocean at the moment, as well as go to market with some of these things in unique ways and impact the market. So it's a really fun time. We are publicly traded. We did a reverse merger and acquired a company that was publicly traded on the OTC market. So our ticker symbol is NBDR. And the way I remember that is no big deal, right? We just went public, no big deal. So that's a whole adventure in and of itself. It's an incredible journey to go on. And if you're thinking about doing that, don't.
Cautionary tale there, huh?
I'm kidding. Not at all. It's been a grand time, and it is an incredible amount of work. And there's a lot of moving pieces. Imagine an escrow and then tens it by 4,000. Or something, and you've got what it takes to deal with the SEC and FINRA and all of the state regulators and everything else that we do. But
so let me ask you, and I think that most are familiar with the term blockchain, but what it means, I don't know that that's necessarily a well understood thing. Can you help define it?
Yeah. So, and specifically, how does it pertain to this audience, right?
Right. Right.
And that's an interesting thing, because first of all, I would imagine that through your network and through your listeners, you've got folks who also work in middle market pieces of the real estate industry, not just the investors, not just the front end, retail salespeople. You've got people that are doing mortgages, you've got people that are doing, back end transactions, right? I mean, it's
right.
all. So blockchain is a secure decentralized ledger. Okay, so what does a title company do today? A title company inspects a chain of title, right?
Right.
So you go in there and they look at all these deeds from 1830 all the way all the way up, and they make sure that, if the oil and gas company has rights to the property, if there's easement rights to the property, all of these variable factors. And then are the county taxes current, all these things. So that is a manual inspection of a chain. Okay. Blockchain is a digital version of that is passed through that system. If you're using it for, say, a property title type of a situation, which a company named Propi, I'm actually sitting in San Francisco today in a hotel room. There's a company, Propi, right here in Menlo Park, and we know some of their people over in Phoenix, and they are doing property transfer on blockchain. That's what they're working on. And they actually just did their first property transaction in the United States, selling a condo. I believe it was in Vermont. It was in Vermont, selling a condo in Vermont on blockchain using their build out of blockchain technology. And that is that's one of the use cases that can be done with it. But blockchain allows for a contract, for example, to be digitally detailed, transparent to the people within the contract network, and transferable or distributable via a token use case, what a lot of people would consider a crypto token. I'm leery to use the word cryptocurrencies for tokens. There's a whole conversation that we can have there about securities versus utilities and all of these kind of things in that crypto world. But blockchain is different from crypto because crypto is a use case on a blockchain, right? It is a token on the system. So what we are building and what we're working with clients in multiple sectors, oil and gas, manufacturing, pharmaceuticals. We had a meeting last night with some very interesting folks in the robotics industry. So, the idea of using blockchain to facilitate these pieces of these transactions that don't need to be pen and paper anymore, that are, archaic in the way that they're set up and are transacted, even with traditional databases, right? In a lot of cases, you'll have a situation where you come back and say, okay, yeah, I can put all that information on a blockchain and I can transfer it down and there's things that I can do, but essentially I could do that with a database. And that's true. It is a decentralized, way of utilizing a database. But that's the differentiating point is a database is in a lot of cases can be a single silo of information, right? And blockchain allows you to silo your information, but have it in a system where, there's a consensus network behind it, where it's decentralized, and you end up with additional security, and you end up with a lot less risk. Let me break that down in a way that maybe your listeners can grasp a little bit better.
Sure.
As an example, Bank of America bought Countrywide home loans, right?
Mm-hmm.
We can argue whether or not they were under duress to do so.
Right.
Why those decisions were made at the time. Okay, but Bank of America buys Countrywide, and Countrywide comes on, and then a few years later, all of a sudden, Bank of America has these billions of dollars in fines for all of these types of things. Now, I'm not getting into what all of those were, but a portion of those issues were human error and transactionally risk created. Right? So you've got these mortgages that are being sold on the back end. They're being repackaged on the back end. You've got these notes, these contracts, right? That are being transacted throughout various parties on the back end of the transaction, right? And every time that transaction happens, once it's securitized or repackaged, once a note's pulled out, or now it's in default, you got to notice the default files, all of these different things, there was lots and lots and lots of fines paid because they were foreclosing on houses that weren't supposed to be foreclosed on. They were charging fees on houses that didn't have those fees in the contracts. There was all kinds of issues that happened from compounded error through this process on the back end of this. And this is all after the house is sold, the mortgage is funded, You've got somebody living in there, they're paying a mortgage payment to the servicing company, right? And so the financial institution ends up with this massive uncalculated risk base, on top of the fact that it costs a lot of money to run those back-end systems. It costs a lot of money to pay those people to do all of that work. And blockchain has the ability to come in with secure, decentralized ledgers and smart contracts that are predetermined how they work and how they interact with a package. And then smart packages on the securitization side. And that contract, you can have everything delineated absolutely crisply, clearly in digital format. And it's binary of whether or not everything's right or not. And so you mitigate the risk of all of the unknowns. So you can have a mortgage. Let's say that you had a mortgage that was coded on a smart contract. And just, we're not there yet. Arizona's just codifying signatures on blockchain. They've got the Arizona, and we're based in Arizona for a reason. It's one of the friendlier, legislative, governments about blockchain. So, these things are in the works to make sure that you can put a signature on it, that you can, enforce it legally. All of, you've got to be able to do a foreclosure, right? And currently we would have to do a ghost process, right? We would have to issue the note and deed of trust, record it with the county, as well as, build out everything on digital technology, prove the systems, file the IP, do all of that stuff, right?
Right.
So, but with that, you have a streamlined process which removes risk, it removes cost, and it makes it much more transactable. So it's an interesting technology for the transaction points of the space, which the real estate sector in and of itself has a huge amount of upfront and then recurring transaction pieces that occur on these things all the time.
So the current space, as far as how the business is being done, primarily paper. I mean, is it still all?
I think most of it's moved to like digital forms and e-signatures.
I guess like DocuSign and that kind of thing.
That kind
Okay.
of thing, and progress is progress. It's not just a situation of saying, okay, well, I can sign this with blockchain and then it's secure. It's a situation of saying, look, we can, and we're working on this. And if you have, people that are interested in this or interested in the idea, we'd love to talk to them as well. We're currently working on a structure where we can build a master limited partnership in the state of Arizona as an entity, as an investment entity, to acquire real estate and distribute the master limited partnership rights through a token use case. And that's one use case where we can take blockchain technology and deploy it in the real world with an existing legal investment framework and come out with a result of not only being able to invest in real estate assets the way that we see the real estate market going and all of our beliefs about the way that real estate's going over the next few years, which is a core part of what we're doing and why we're doing it, but also that we can prove out how that works with existing laws and existing regulations. We went public to be able to say we're regulated first, right? We're already regulated. So this isn't about, Lambos and, all this kind of stuff in this, crypto game. There's a lot of very interesting uses for crypto tokens. There is a very, I think, solid argument for cryptocurrencies as a security asset, right? We use gold. Why? Because everybody agrees that gold is valuable. I mean, at the end of the day, throw it at somebody's head, it hurts. But other than lining spaceships, you don't have a lot of personal use for gold. So I think that those things are true. But what we're looking at is how do these technologies and the uses that are already in place, the legal frameworks that are already in place, a master limited partnership for an investment tranche is a good example of something that could be or should be deployed on blockchain and done through a token. And my reason for making that argument is that currently, if I buy into an MLP somewhere in Arizona and then invest in a $25 million building, okay, when I pass away, my wife gets that ownership right? And so we're getting, whatever dividends and blah, 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 blah. But, I pass away and now I bought this thing. I know who it is. I know who the players in the pool are, right? All of these things. I've got my little slice of that. It goes over to her. And now she wants to sell it. Well, you can do that, but your options are pretty limited, right? You've got the managers of the partnership, or you've got to try to market a minority stake in a larger entity that's not publicly, it's very illiquid. So in most cases, you're going to have to take a discount, take a haircut on that. But with the tokenization of it, you would have a very, very clear idea of what that percentage is, what it pays out in dividends. It would all be very, very, very clear, and it would be very transactable, right?
Yeah.
And so we're not looking to change the wheel and say, hey, speculate on a token, come over here and buy this, and maybe it's going to go 2,000%. Like, we're not doing that. But what we are saying is there's a reason that these legal structures exist. There's a reason that the regulations around issuing securities and these things exist. It's because we have hundreds, if not thousands of years of legal precedent and of people doing things different ways and seeing what works and what doesn't and who benefits and who doesn't. That brought us to a point where we have legal structures and frameworks in place for how these things get done. And we simply believe that using blockchain, smart contracts, and even token use cases in the correct format can be built on those exact same rules with those exact same structures, with less cost, less risk, easier transactability, more transparency, more security. And that's a win-win.
No, I guess from a big picture view of what you've described, it makes sense. I mean, we've already got the fractional ownership, if you will. Clearly in the mortgage debacle. I mean, that's a perfect example for why to use it as opposed to and what can happen if you don't use it. Just to be able to track it precisely and actually, I mean, that to me, that's one of the clearest examples I guess I can think of based on your how you laid this out.
If you there's 3 banks in India that put together an internal blockchain. So just because a blockchain is transparent doesn't mean it has to be public, right? So it can be very transparent to a limited group of people, right? So 3 banks in India put together a blockchain, and they built that blockchain to tell them if a customer was going into bank A and proposing to put up an asset for collateral, and then going into bank B and proposing to put up the same.
Yeah, there you go.
Right?
Yeah.
Now, you and I laugh about that because we're in the US and you go get a mortgage and there's this very thorough process and, all this stuff, or you get a business loan and there's the same kind of a system exists, right? But those systems, A, don't exist ubiquitously around the world. And B, in large cases, they don't even exist so much here in the US. There are a lot of existing systems, and there are a lot of existing pieces of our financial world that have dangerous redundancy and opacity to the point of true detriment to society. One example of that is the unregulated credit default swap and mortgage-backed securities markets pre-crash, and we're not going to get into where they are now. That's not my thing. But those markets exist partially because of the opacity that's in them.
Right.
But they're also very, very dangerous to both the people speculating with them and also the general public at scale. And that leads me to believe that that's a piece of a system that is broken and can be addressed.
So, yeah, and I think that makes, it rings clear to me that is I mean, had the blockchain technology been in use, a lot of, like you said, people getting kicked out of their homes uh, when they'd been paying the mortgage, and I mean, it would have been more clear as to be able to identify. No, no, no. Look here, here it is, kind of thing. So my question, and I appreciate you kind of going through this, because it really, the whole term blockchain to me, before yesterday, when I was talking with somebody else about that I was going to be speaking with you today, I was like, I had no idea. I was thinking, Bitcoin and just the vagueness of that. But so let me ask you. So if I hear you right, essentially a syndicator of a property could could they create a blockchain,
Yeah,
so for the owners and the information, and so the percentage, and like you described, if a member were to pass or want it out, they could then sell their portion and it wouldn't affect the whole. Is that
yeah. So we actually can deploy that. We are prepared to deploy that in real time for investment groups, and we're looking at and discussing, the legal structure behind our own, deployment maybe of a master limited partnership out of Lannister Holdings, and looking at that. We're also open to, you know, working with folks like that who have that use case, or people that are already grouping or bundling investment vehicles together for stuff like that, is stuff that we are deploying and building and ready to deploy as we speak.
got it? So in that example, is the blockchain, is it necessarily tied to currency? I guess because I've always thought of cryptocurrency as meaning like a substitute for whether it be dollars or whatever you trade
Right.
in.
So you specifically didn't hear me say cryptocurrency for a reason.
Yeah,
Um,
never.
because there's a difference between a currency and a token. So a token is more like a share, right? In my
Okay.
opinion, there
Mhm.
are utility tokens, and there are reasons to have tokens for security uses that should essentially be non-monetary, especially non-speculative. But that's a conversation for another day. With that being said, what we're talking about is a token use case as a instrument of equity ownership, essentially. Okay, and so that really makes the token a security. That is, in my opinion, and I understand there's folks out there that are going to disagree with me, and they've made lots and lots of money issuing these tokens without the security part of that. Um, I think they're going to have some very interesting letters from the SEC in the next couple of years, and I'm not real interested in being that guy. So, so as I said, we went public and did the reverse merger specifically so that we would be in the position of saying we're already regulated. We're doing this with our securities attorneys in tow, and our financial advisors, and so the products that we launch, we are going to the regulators and registering them and working with them to say, is this correct? Sometimes the best you're going to get is a letter saying, well, we're not going to tell you it's not correct. Okay.
Right. Right.
I can work with that, I think. Um, but the best way to think of it is just like a share of stock, in my opinion, or a share of a master limited partnership now. I mean, that structure exists for a reason. You've got the whole, and then you have the individual, ownership pieces that come off of it, and you own them via a piece of paper,
Right.
right? You stick that piece of paper in your safe, and once a year you get a dividend check, right? With a breakdown statement, or they wire it into your TD Ameritrade account, right? So that's the existing structure. And there's nothing, that existing structure works. It is effective. The legal support, the legislation, the rules behind it make sense. They're there for a reason. Why do we have the paper?
Yeah.
Why do we have a transfer agent in the process, right? Why if I want to transfer this MLP ownership or this investment structure ownership, whatever term you want to use for that, why do I have to go to a title company and have them move it for me to another person, in some cases? And so all of those questions open up the door to say, okay, well, is there a better way to transact this business? Same business, Same returns. No, your token for this equity is not going to go from 0 to 10,000 tomorrow, right? But
Right.
there's more capital available for known returns on pooled real estate funds than there is cryptocurrency markets.
Right.
I
Right.
mean, we can agree that the real estate investment market is larger than the cryptocurrency market, right? So what I'm saying is I believe that there's more moon opportunity in utilizing the tokens as a use case for disrupting, streamlining, securitizing, and deploying the existing structures in the new, better way.
Got it. So, let me ask you a couple of questions here. Disruption. So usually that means there's somebody's the new winner and the old loser, if you
Oh,
will. Who do you see? I mean, it sounds like title companies could have like a bullseye on them, like travel agents with the internet kind of thing. Is that
yeah. I would say, our goal is to disrupt the back end and redundant and cost heavy pieces of these systems.
mm-hmm.
That removes swaths of jobs from those places. I live in a small town in Central California. We're based in Phoenix. I'm in Phoenix all the time, but I actually live in a small town in Central California, and maybe 40,000 people. And there's 3 title offices with 4 or 5 employees each. And I'm not picking on Title. Title does an amazing job. I love those folks, everything else. But you can go into the back end of your servicing on your mortgage company. You can go into the middle pieces of the systems of the financial institutions that are trading and transacting and moving the mortgages from owner to owner, or are securitizing those. And that's another thing. I'm sure you have listeners that are listening there as well. If you're a mortgage securitizing firm, if you're bundling mortgages and financial instruments together and doing this, we're open to talking to you folks as well. There's a myriad amount of ways for this to get deployed inside and throughout this sector, and there's a lot of room around it right now. And so we're wide open. We're very open-minded, and we're not saying, "Oh, this is ours." And we're super open to hearing all the ideas. We've never gotten worse from having more input
Yeah.
ever. So I want to talk to those folks as well. But that ability to disrupt that middle piece, I think ultimately does have some impacts on the overall employment in the middle of that sector over time. That's not an
Right.
instant, sort of I think if you're to look at an instant sort of a knife cut on an industry, I think probably driverless semis is probably the real big one that's overhanging, the US. I mean, that's a few million jobs, I think. But in order to save those costs, in order for our products to impact financial services with cost savings, to be revenue positive technology products for them, and to reduce risk, and to reduce and to improve security, we have to disrupt pieces of the existing cost base. And one of those pieces is some of those employment positions in the middle of that market.
Got it. Let me ask you kind of crystal ball question. So we're in 2018 now. Conversations like this are being had. Companies like you are working to deploy and make this more of a common, use. Do you have any kind of sense of how long before this is just the way we do business, kind of like, email?
Um, I think that we're pretty much about there. It has a lot more. All right, there's that famous Katie Couric tape of what is email, on I think it was Good Morning America or whatever that was. And so I think we're pretty far past that moment in time. The 2012, the 2010, 2012, what is Bitcoin? That's gone, right? And looking at that, we were actually having a conversation with our team last night after some dinner meetings about that moment in time when an idea or a belief or a brand reaches full public awareness, right? That there's a threshold and then a crescendo of where, okay, now it's ubiquitous. Now everybody's heard of it. Maybe we don't know what it is. Maybe we don't really understand the core technologies, but let's be honest. How does your cell phone work? Yeah, I don't know either.
Yeah.
So I'm going to go ahead and pick it up and use it to make a phone call today. So I think in a lot of ways, we're already there. We have already relied on these systems, whether they're blockchain or traditional or siloed data or swarm data or decentralized, right? We have essentially said we want to make sure that technology is running these systems and picking up these pieces. Okay.
Got it.
For the blockchain piece of it, there is not a single industry, there is not a single government, there is not a single university that is not looking at these technologies, looking at the way that these systems work and impact systems, and working on some use cases. So I think we're past the threshold on that. I don't think that it's something like people walk around in their daily life like, I know blockchain, da 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 da. Just like I don't know the chip name that's in my phone. That's, you know what I mean?
Right.
So, but I view the next 36 months as the period of time where we see the transition from the crypto world and the just deregulated, Wild West, which by the way, for the guys that are building amazing, incredible things with the capital that they were able to acquire and really doing and they're out there doing amazing things, like super cool and, way to go. And, I sincerely hope that all of it works out wonderfully and everybody, has a positive benefit to society and their shareholders and their stakeholders. And I hope that's a beautiful, wonderful thing. With that being said, I think that there's probably a lot of, nasty stuff possibly that's out there and fraud in those markets. But now we've reached a point where that has crescendoed. People know about it, blockchain, et cetera, et cetera. And I think the next 3 years is the integration of these tools and systems and the development of these technologies to a point where they are running in the back end, where they are reducing risk, they are adding value, they are cutting costs, and they're just part of the way that we run a lot of these businesses.
No, that'll be an interesting turn. And it's funny, is like you said, it's already existing. So it's in use. It just, I guess, the the wider range of use and kind of the more people recognize it, that it is for what it is, and it's not such a a lightning bolt kind of a change of doing things. It's more of a matter of just the way we've done it, but now it's in this more secure, digitized form.
Yeah, and also there's some reality checks coming on what can blockchain do. Like, it's not a unicorn. So no, you can't put it on your kid's scraped knee and make their knee better.
Yeah, right.
Hashtag blockchain. There's definitely some companies. I think there was an iced tea company that kind of did something along those lines. Where you're just it's gonna do all kinds of stuff. No, I mean, if you're looking at systems and processes and how data is transferred and the different ideas around the token use cases for capital, token use cases for mortgage-backed securities, token use cases for all of these different, investment vehicles or all of these interesting things, including security applications, et cetera, you get to a point where the use cases for it are much broader than the availability to build out any one thing at a time. And so it ends up getting siloed in specific areas for parts of its development cycle, right? For parts of its life cycle. And I think right now what we're looking at in the phone calls that we're having literally every single day with people across the spectrum is existing business, existing infrastructure, existing governments looking at it and saying, we can deploy it right here in right this way and get this impact. And that's going to be death by a thousand cuts. It's not like you come out and all of a sudden, okay, here's blockchain and it's going to integrate with all these things and fix stuff. You know, I mean, cloud infrastructure has taken 15 years at this point to get to the point where, you know, pretty much everything you're doing on your computer is pretty much run on the cloud now, right? But blockchain is a little bit different than that for two reasons. Number one, you can build individual pieces that do individual things and connect with other things for smaller companies. You don't have to build a massive data center full of, you know, hundreds of millions of dollars of equipment to deploy it for one single business, right? So I think that blockchain can be deployed out through death by a thousand cuts in multiple verticals, all building systems in processes and use cases on it for their own verticals, for their own cost savings, for their own risk mitigation. And that ends up building out the overall life of, you know, Web 3.0, which is what we believe blockchain technology is.
No, it's interesting. The you know, I've gone from knowing what the word was yesterday to I feel like I've got a pretty good understanding of it, and also I can see the application in real estate specifically and beyond. And not to fear it as some like meh kind of thing as much as identify and see how it can be used, and like you just said, in specific applications or specific instances, as opposed to some big blanket, you know, scary kind of thing. That's great.
Absolutely.
Joe, before we wrap up, where can the listeners go to find out more and connect with you?
Yeah, so you can follow me on Twitter at Lannistor CEO. We are Lannistor Holdings and now Lannistor Development. So Lannistor Development is our client-facing, you know, blockchain development. So we're building, working with people in manufacturing, robotics, pharmaceuticals. I mean, across the energy, insurance.
I'd love to talk to you more about that. We'll have to.
All day too.
We'll have to have another conversation about that. I'd love to hear.
And so, you know, for the folks who are doing, you know, mortgage bundling and securitization, there's a lot of use cases there. We'd love to talk to you guys. You can find us at LannistorHoldings.com, LannistorDevelopment.com. The company is at Lannistor NBDR on Twitter. And then, of course, we are traded on the US OTC market under the ticker symbol NBDR, Nancy Bravo Delta Robert. And so, yeah, we're happy to do exploratory calls on use cases. If folks are looking at ways they can use blockchain or smart contracts, or they think that they want to put together, you know, a real estate investment type of vehicle and do it on a token use case, that those are very interesting conversations, and we are ready to deploy those tools. So we'd love to hear from folks.
Awesome. Joe, can't thank you enough for teaching me a little bit about blockchain. I know I've learned a lot, and I'm sure the listeners have too.
Well, Darren, thank you for having me. I appreciate it. I hope you have a wonderful day, and I hope all your listeners got something out of this.
I'm sure they have, and hey, I look forward to doing it again soon.
Awesome, man. Have a great day.
All right. For our listeners, if you like the show, please share the show with somebody you know. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.